What is up, guys? Today we are going to long pump fun and I'm going over the whole trade, so yeah, bear with me. I'm going back in time because I'm gonna trade it like a real trade, and then we're gonna build context first. We were going lower, and what did we go into? Look at this, your 3-hour demand zone. Why is this a demand zone? It's your last candle going down, which goes lower than this bullish candle, all right, leaving an inefficiency right there. So that's the demand you're coming into. Okay, let's go on the lower time frame and let's see what is happening there. Because we made a lower low, of course we were in a downtrend, and we made a lower high. So what do? You draw your range from low to high. Very easy. And you want this naked low to get taken out, of course. You preferably do not have an internal accumulation right here to play. It's way better to take out that low and accumulate from there, you know. So we're building up very good liquidity here. And why is that? Because this high is not taken out by this high, is not taken out by this high, is not taken out by this high, and so on. So this is forming your liquidity trail. So I'm gonna draw the liquidity trail, and that's what you want to see when you're taking a Wyckoff trade, because market makers are building a liquidity trail for a reason. And I'm going to correct myself, the trail is right there. Why is it like this? Because you left supply right there. Structure is going like this, it's going higher, lower, higher, and you make a lower high. Your first lower high, boom, big aggressive move down. And this was your structure. And what did you see here? Structure supply. So you had your move down, going up, this is going to be your supply. Why is the supply exactly the same as this demand? Because you formed an inefficiency. This is your inefficiency, which market makers need to fill. Good, that's your supply. So that's going to be your first TP if we're going to it. So what do we have here? We have a deviation of that tab 1. So now we're gonna watch what is our tab 3 POI. And you'll already see here on the 10 minute a very nice POI for your extreme demand. And why is that? Because it's very close to the tab 1. And what I always like is to deviate that tab 1, break structure and enter. That are the best entries because you deviate that tab 1 with your tab 3. Okay, so we have the return to zone, we have the deviation, we do have a volume profile right now, which is in the upper section of the range. Like, that's probably not the best thing, but it is fine. And you see here the POC as well as the volume area high are protecting this supply zone. I'm gonna play price, and I'm gonna mark out another extreme demand level, because what is structure saying right here? This is going like this is going like this, and then we were going lower. And you have some internal structure right there. So price was going like this, made a high, made a low, made a high, made a low. So what are your demand levels? This is gonna be a demand level. This is gonna be a demand level because this is structure demand as well. And this is gonna be a demand level. And you always pick your most refined for, of course, your extreme demand POI. That's why I call it extreme demand. Let's delete this, because if it goes like this, you know, then it will take out this. So let's delete this and let's watch what happens here. We see already a good return to zone building up, indicates price might go lower and form an accumulation right here. That was the plan. So let's see what happens when I actually play it. And when I play, you can see where we're going higher. We were taking out that return to zone a little bit, but not fully. Like, you took out these highs. Yes, you took out these highs, but you left these highs intact. So these highs are still intact. This is still amazing for potential good return to zone. And you formed a pretty good high here. What was the reason for this high? To go lower into this demand, potentially. But let's see what happens, because you see it very often. The price forms a distribution right here, goes lower into demand and breaks structure. Okay, so let's see what happens. When I break price, I'm going on a bit higher time frame, then it goes a bit quicker, and then you see price left those highs intact. You see what happens here? You have all these highs, look at this. You have one high not going higher than the other high. You have this high being intact, this high being intact, this high being intact. All those highs are being intact, which makes it for a good return to zone. Right here you have your liquidity. This is your move up, go down. Oh, this is your move up, go down. And then you're leaving your liquidity level right here, which isn't grabbed yet. This is very high extreme liquidity. Extreme liquidity is often like right here after making your tap 2. So would I only trade extreme liquidity grab right here? Nah, I wouldn't. But the demand was very nice. So let's see what happens here. We're leaving all those highs intact, extending our liquidity trail. And that's just amazing for a potential entry. You grab that liquidity, went into your extreme demand POI and broke aggressive structure, which is very important because then you're leaving demand behind. When you break a structure aggressive, you're leaving demand behind, and that's always what you want to see. What happens when you break structure here? This is going to be your structure break. Why is this going to be your structure break? Because you have structure going like this, boom, lower high, mitigating this demand zone and break structure. Okay, you have that incredible return to zone above you. You have some supply right here above you. Does this supply matter? No, not really. Why? Because the break was so aggressive and it came perfectly into your tap 3 POI. Okay, so this is your tap 3. We can connect the dots. This is gonna be your model 2, Wyckoff model 2. Was the break aside of volume profile? Let's see, because as I said in the beginning, the volume profile wasn't the best, and this POC is now protecting this little supply zone. But what happened to the volume profile? It went lower. You remember this POC and the volume area high protecting this supply? That isn't anymore the case, which make this supply less good. Okay, and the break was in the volume profile because this is your volume area low, which makes the break in the volume profile with a good return to zone, which is a +1 +1 +1, you know. So what are you gonna do? You enter under break of structure, your stop goes below the low, and your first take profit is gonna be right there at the supply. And even I would take some out to de-risk my position. Then you're already up 2.2 RR, and then you're just de-risked. You don't have to stress anymore, you know. So that's always a good thing to do. And then you leave for the technical target, of course, at the range high. Why is that also a very good target? Because as you can see, this high is not taken out by this high. Okay, that's very important. If this high was taken out by this high, it already looks less good. Okay, good. So when I'm gonna play it, I'm going on a higher time frame. You can see we left some demand behind, and that's just this is awesome. We went lower to mitigate that demand. So let's actually draw it. We went lower to mitigate it and went higher. So when you actually mitigate this demand, is there any reason to go lower even more? No. What can you do? You can trail your stop loss to this retest. You can take out less profits if you want to at this target, so because you're already almost fully de-risked, so you don't have to de-risk anymore, and you can just extend your target to the range high. So you can take a little bit of profit right there, which makes you fully de-risked, and then you just target the range high and take some profits for a small stake as well, you know. So when I play, we didn't grab the range high yet in real time, and we went lower, and now price is right there. So you are de-risked. You can also have your stop loss still below this point and take more profits right here at the supply to be de-risked as well. It's just dependent how you want to enter the trade, how you want to manage the trade, you know. Personally, I would have I like to keep my stop loss below Wyckoff points, because those points are protected by market makers, especially with that big move up, you know, and not having any really more supply right there below us. Because when I look on the 30-minute, also this candle is your demand, it's already mitigated, so no reason to lose money on this trade. And yeah, amazing trade, like literally amazing trade. And do I have to say any more? No, that was it. Like, just play the trade, stick to your plan, and when price goes as high as this, you know, take some profits. It's never wrong to take some profits. Oh, I have to keep my position because the technical target is not hit yet. No, like it's very good to be de-risked and just move on, you know? Risk-free, very nice trade. Ask questions, leave behind a like, you know? And see you in the next one, guys. Ciao, ciao.